Hello traders and welcome back to another Conquer FX YouTube video. Today we're going to be talking about these specific metrics that I've collected with the members. Okay, so basically, each week we'll kind of talk about some sort of subject that I'm planning on testing. And if there's anything interesting that I've found, I will make sure to share those statistics with them. But what we can see here is basically, we're talking about the ATR levels, which we'll show you in the charts in a moment. And when we use a specific indicator, it allows us to call the top or bottom around 60% of the time. Now, something you should note is the sample size. The sample size isn't huge. It's about 117 days. Okay. And you could definitely expand on this sample size, but this is the point of this YouTube channel. It's basically to give you kind of different ideas that you can build into your own strategy with some further testing and back testing, etc. Okay, so now that we understand the stats behind it, let's just jump straight into the chart. So the indicator that we used for this specific test is this one here. So if you just have a look at this daily ATR high/low levels, and you can basically press that on your chart or place that on your chart, and you'll see that it comes up like this. Now, the idea behind this is that when we actually reach one of these key areas, it almost acts like an area of support and resistance in itself. Okay, not actually technically, but you know what I mean, with a 60% chance that it's actually going to reverse in this area. Now, another thing that you should keep in mind, we're treating this like a zone. We're not treating it like it's going to hit this specific area and then it's going to reverse completely. So let me show you a live example. So we have specific metrics in my own mentorship that we look at because we trade from the high or low of the day. Now, if you take a look at pound dollar here on the 9th of February, we can see that there was a lot of one-sided volume. And as we were heading towards these ATR levels, I was notifying the members and I was saying, okay, potentially there could be an area of reversal here. Really though, we couldn't do anything with it because our own entry, it didn't satisfy any part of our rules that allowed us to enter into a reversal trade in this case. Okay, we like to have a few more things involved in the process to shift the odds more in our favor. But understanding, this one simple statistic alone, we knew, well, there's probably a 60% chance that we will see a reversal at this area. Now, you can use this, in so many different ways. You can jump here and move everything. Let me just move this to the side. You can have a look to the left-hand side. And as you can see here, we have an area of resistance. Okay, so just in line with that, we have an area of resistance. Realistically, coming up to this area, that could increase the chances that we're going to see a short position. On the other side of it, we have this build up, and I often talk about this with the members, that when we're looking at real scalable opportunities and reversals that will move very, very quickly, you want to look for price action that is almost like a stairs in a way, so we can jump down. Okay, so you're imagining basically climbing up the mountain to jump back down it, and that's exactly what I want, or that's exactly what I'm talking about here. So all these different price action and things like that, you can use to your advantage to be able to probably shift the odds in your favor that little bit more, and then obviously combining that with whatever fundamentals or any different metrics and rules you use in your own plan. But as we can see, when we come up here, let's just zoom in here now. As we come up here, let's just play this out. Yeah, here we go. We hit ATR and we can see that immediately we get this kind of M pattern. Okay, so if you can't see that, let me just kind of draw this, or sorry, yes, M pattern with this bullish candle here. So we have an up candle, we have a bearish candle, we have an up candle, we have a bearish candle. So even if you enter it as we pass through that level, you would have a fairly good risk reward behind this trade with your stop above. You could even put a limit order here so that we're catching the momentum as it carries through. But obviously we're not just going to trade this with this one single statistic. This is just to promote ideas, and you can add this into your own plan. From there we can see that the market did in fact reject this area. And this is it. We're looking for moves that move very, very quickly. Nobody wants to be trading price action that's shitty and, like this, okay, almost consolidating. We want those moves that really blow off in one direction, those one-sided volume where there's no second guessing, because they're the stress-free trades. And when we use different metrics like this, such as the ATR indicator, and if we're looking for major reversals, we can eye the price action itself to understand how the market is sort of feeling in the way as we approach this level, get a kind of gauge for the price action itself. And, there's this common misconception that we want to see these kind of this sort of price action where we're getting dojis and all this other stuff that we see online. In fact, I look for the opposite. I'm looking for candles to have a lot of momentum as we break into support or resistance areas, or as we break into new highs and lows. And because what you'll find is every time we break into a new high, so let's just say this is a high here. Okay, as we break into a new high, if we break into that high with a lot of force, the actual impulsive candle that breaks this is almost a trigger if we get that next bearish candle, which you can see here. As we're breaking a new high, it's the impulsive candle breaks through, it's the trigger, triggers everyone above, and then we basically collapse back inside, and then that's when we see that reversal. It's this basic understanding that a lot of people are saying, oh, you want to see the candles getting smaller and smaller, and they're the key reversals. No, usually what this is actually just a simple correction. So it's a smaller leg that you're catching for the overall upper move. And you can see this here. We can see momentum is slowing down around here. Then eventually you think you're in the drop, and then we move up. Compared to here, we have two very large momentum candles, and then the drop comes in. It's a simple change in how you view price action that can actually make a very, very big difference. It's the same here. As we can see, we have these very two large bearish candles. It's the fact that the majority are going to be afraid to buy this market with these two large momentum candles that makes me actually want to get into the long position. Just like the sell position here, where we had this very, very large bullish candle. Using simple things like this will help you actually come up with different ideas that when you're coming here to the ATR level, are we more likely to see a reversal here? Are we actually trapping traders up high so now we can reverse? Different things like this will help your trading. So you can see multiple examples of this. You also have to understand that at times this is of course going to fail. Let's check this here. This is definitely a day that triggered ATR, and you can see here, this is a day that failed. But this is the thing. It's up to you as a trader to basically document the days that win, document the days that don't, document the days where this actually plays out, and then document the days that it doesn't play out, and ask yourself, what was the difference? And even if I got into every single trade, what are the warning signs that this isn't working? Should this trade be blowing off straight away? So for example, after this bullish engulfing, should it just come down to the last high of this bearish candle here before moving up higher? If it breaks down any lower, even this level here, if it breaks past this low, should I be getting out of this trade straight away? Was there any signs of indecision here? Was this pin bar, this rejection candle, enough to get out of this trade against some area of resistance here? All these different things will help you develop these different metrics that you can use. But it's very, very important that when you're carrying tests out like this, that you're not just gaining, a statistical point of view like this, but you're also gaining a visual point of view where you're able to compare, okay, why did this winning day work and why did this losing day work? So for example, let's just have a quick look here. If if I can screenshot this here, we're going to do something. Okay, and let's just go straight back to that other trade. Okay, so we can see here. Okay, so ATR was up here, and we can see the rejection. Different metrics like this. So if we compare them, so what can we see? Well, we can first of all see that with the ATR level that failed, We did approach it with some nice price action. You know, the price delivery was very important, but we immediately saw that, okay, there was some bearish candles that were coming down to test the low, and then we saw the bullish candle and bearish candle, and really it was, you know, doing nothing other than creating a foundation for us to move lower. Although it created this W pattern, when that W pattern actually failed because we didn't break the momentum here, then, you know, it was probably time to cancel that trade. This W pattern, which signifies usually a bottom in the market, failed. But when we look at this area here, this M structure held. So we can see the up candle, down candle, up candle, down candle. It was that last down candle with that little wick there that placed in the high. And we never came back up to even trigger or test that high again. The high was in place and that was it. Those simple metrics could help you get out of these trading opportunities even quicker, you know, being able to cut your losses short. And that's just a basic one that I came up with on the spot. There's plenty of different things that you can add into this when you do some further testing. And it's very important that we actually put the emphasis on that and the importance of it. You know, you need to go and test this yourself. You can't just take a little statistic like this that I shared with you with a small enough sample size and believe that, okay, I'm just going to start throwing this into my trading. Yes, this could provide a huge advantage for you to be able to call tops and bottoms just like this one here. But that doesn't mean that, you know, you're going to go into in on Monday and the market's just going to start giving you opportunities straight away. Also, this test was actually only done on pound dollar. So for everyone that trades pound dollar, you know, expand on this sample size. You know, it was about a year and a bit the sample size was, you know, all from 2022, I believe. So yes, 2022. So a year and about a month or so. So don't be afraid to expand on this test, see if it fits into your own strategy. And if you have any questions, just send me a message and I'll get back to you as soon as I possibly can. But if you do enjoy videos like this, breaking down the statistics, talking about different ways we can trade the markets and maybe, you know, giving you different ideas in your own strategy, please subscribe to the channel. Please like this video because it really does help with the loss, and comment down below any other statistics that you may want me to run through. I'll see you in the next video.